You might have seen traders, what they do is they draw lines like this. They say the sell side liquidity is taken and the price will go up. So the question that pops up in mind is that why is this the sell side liquidity point? Why not this one? Like this is also a low, this is also a swing low. So why the price swept this low but not this low? So in today's lecture, I will teach you the secrets behind these liquidity sweeps. So uh, this is one low and this is another low. In liquidity sweeps, you have to understand that the low is of no importance. This low and this low has got no importance. What's important is the PD arrays below this swing low and this swing low. If there is a high, the high is of no importance. What's important is the PD arrays above this swing high. So in today's lecture, I will show you those PD arrays which lies below this swing low and this swing low, and then you will understand why the price pumped from this point and not this point. Okay, so before jumping into that, I will use two terminologies in this lecture. One is order block and the other one is breaker block. There are many definitions of order block, but the one I use is this one. Let's suppose the price is going down like this. Let me color it red. The price is going down. Okay, let's suppose this is a weekly candle, and then you get an up closing candle. Okay, I will color it green. You can see that this candle closed above it, and then in this strategy we will get another candle and it will leave behind a fair value gap. Okay, this is a fair value gap. So this is called a bullish order block. You can see down closing candle followed by up closing candles and this fair value gap. So what happens in bullish order block is that the price retests this fair value gap and the price goes up. Okay, this is what ICT traders do. Now what is a bearish order block? In bearish order block, the price goes up. Okay, you get these candles and then all of a sudden you get a down closing candle. Okay, it's just the opposite of bullish order block. Now this fair value gap, this will be bearish, and what will happen is that the price will retest this area and then it will go down. Okay, now one thing is that if the price keeps going down like this and it doesn't retest this fair value gap, it will get retested sooner or later. Okay, this fair value gap will be retested sooner or later. Now this is order block, and another thing is that what is breaker block? So breaker block is invalidated order block. Like in this case, the price is supposed to pump from this fair value gap, but what happens is that sometimes the price goes down below it, closes below it, and then it retests this fair value gap and the price goes down. So this was a bullish order block, but it became a bearish breaker block, and in this case the price is supposed to go down, but what happens, the price closes above this fair value gap, retests it, and then the price goes up. Okay, and this was a bearish order block and it is now a bullish breaker block. Keep it in mind. The breaker block FVG will get retested. Okay, it will get retested sooner or later. Okay, like if the price goes up and keeps going up, then sooner or later, if it's days or weeks, it will go down into this fair value gap and then it will provide this pump. Okay, and in this case this is breaker block. If the price goes down, it keeps going down for weeks, sooner or later it will get retested and it will provide the resistance. So you have to keep this point in your mind, and now we will discuss the liquidity. So as I said, this low is not important. What's important is the PD arrays below this swing low. So we will highlight all the PD arrays below this swing low and this swing low. Okay, so what are those PD arrays? Those breaker blocks and order blocks. You can see this is an up closing candle followed by down closing candle, and you got this fair value gap. Now, what is this? This is a bearish order block and the price is supposed to go down from this point. Okay, so this is one PDRA. Now, we will see any PDRAs below this swing low. So, if we go back, you can see that this is the fair value gap. Okay, this was a bullish order block. Okay, down closing candle followed by an up closing candle. Okay, so this is also a fair value gap. Now, you can see that this gap got retested again and again. Here it got retested and then again this swing low, this fair value gap was retested. Now you can see this was an order block, but the price closed above it and it became a breaker block. But you can see the price came down and it is not retested and the price went up. Now when the price swept this low, okay, I will draw this line. When the price swept this low, it entered into this breaker block, this FVG of the breaker block. As I said, sooner or later this will get retested and it will provide this pump. So now here you can see this low was swept and it got pumped. Why didn't it sweep this point? Because there were no untested fair value gaps, there were no untested order blocks, no untested breaker blocks, and here there was an untested FVG of the breaker block. It got retested and the price went up. So that's why this is an important sell side liquidity point and not this one. Okay, there is no reason for the price to sweep this area because there are no untested fair value gaps. Okay, now here you can see there is this bearish order block. The price went up and it got rejected. Now the price has gone above it. If the weekly close happens above it, the price will retest this area and then it will go up. Okay, so this is how the liquidity sweeps work. Okay,